Hello there, this is Victor Santana here, and this is for Thursday, August 7th. So we're going to go ahead and take a look at the markets by looking at the charts here. So let's go ahead and get right to it. Okay, so here we're looking at the Dow, the ETF DIA, and as you can see here, we've had a move up and then just a fall. Okay, so we had a pretty strong gap up here this morning and it fell. Now, so far from the time it started sliding down, you could see we're down 4.7% to the very bottom. So we're kind of there as a half correction here. Usually a full correction is 10%. So are we halfway there, or is this going to be a minor pullback? Who knows? So looking at the CCI here, we had a entry signal to get a setup here, and there was a fake out, and then we got another signal over here, right here, and on this day we get triggered in with another fake out. So these are two in a row, so the trend is very strong to the downside. Now, what I am seeing though, which might be the positive news, is I am seeing a divergence from here to here. As you can see, the pullback has a higher is up higher here compared to this dip down here, while the price action is basically lower than this peak here. When this peak was created, you can see it was right in this area, right there, and now we are down in this area here. So what I'm seeing is a potential divergence, which means we could see a small pop-up going. Where to? First line of resistance will be right up here. Eventually, if that makes it past that, it could be right here with the 20. As usually price action eventually gets to the 20-day moving average here, or the 18 rather, in this case the green line. And I do see a gap up here, right there. So maybe sooner or later we'll get a move back up to fill this gap here. But for now, things are looking pretty bearish here. But as far as looking for a bounce, let's not consider until we could break this high right here. All right, so that's what we got for the Dow, and let's switch over to the S&P. Okay, here we're looking at the SPY, the ETF for the S&P 500, and as you could see, we also had a nice gap up and a fall for today. The good thing here is you could see this red line, which is the 100-day moving average. It did tag it and pulled up, so this is showing a little bit of support here. So that's a good thing, but maybe that's where it was targeting at. Now we probably could see a bounce heading up in this general area here. Looking at the CCI here, you could see the indicator here is down at 107, which is a higher peak than this previous one, where if you look back, the previous peak was in this area here. We traded lower while the indicator is higher. So let's go ahead and consider that a positive divergence right there. So we may get a signal if we can trade up higher. So in reality, you might trade a few times down here, but we'll adjust our entry accordingly. So we'll go from there. Now let's go ahead and look at the NASDAQ, the QQQs. Okay, now we're looking at the ETF QQQ, which is for the NASDAQ. And as you can see here, it also gapped up and fell down. And the blue line here, which is representing the 50-day moving average, is providing support. So this is showing more resilience to the market than the SPY and the Dow. So it may get a bounce here. However, note we have the 20-day moving average here, so it's going to be important that we might first area of resistance will be in this range here because of the 20. But if this was the correction here, then we could probably see a move back up higher now. So we will then for now consider putting a entry right above the high of this here. Reason why I'm saying that is by looking at the CCI down here. It is now dipping back to the negative 100. It is very close. It's currently at negative 93, so it might get another pullback a little bit to get this under negative 100. Even if it doesn't, because it just previously triggered it, we are still going to follow the rules and set a buy stop at the high of the previous candle, which is this candle here. So again, if you're looking at the CCI, we do see a positive divergence here, which we can get a move back up, and maybe even up to this area here would be a nice target as well. So we'll just have to see. In terms of how much of a pullback here had occurred, which I'm pretty interested in figuring this out myself. Let's just do that right now. It looks like we had a almost 4% pullback at 3.9 on this here, so shallower compared to the other ones. All right, so we'll keep an eye on that. And now let's go to the Russell's 2000. Now we're looking at the IWM chart here, and as you can see, this is the weakest of them all. It has pulled back 9%, believe it or not, from all the way over here from July all the way down to the August here. So this is the one that has the most damage, and as you can see, all the moving averages are right up above it now, which is going to be a lot of a resistance. Now, one interesting thing I'm noticing here is, if I could just draw this in here, is possible head and shoulders here. You got a shoulder here, and down here you could say this is the head here down to this neckline, and then you got another little shoulder here and down here. So if you draw these two lines here, this is where the breakdown occurred right here. We're going to approach back to here, and if it breaks down, then we could see the move of the distance from here to here, which I'll go ahead and quickly add it in there just to show. So let's assume right there, this line's to the bottom of the neckline, and we put it right there, and there it is. It's going to be below this chart, so it might not be a pretty picture, okay? But if it happens to be able to break above all of this resistance here, then they continue up higher, which will be good. But for now, just something to keep an eye on. Let me get rid of that, and to be aware. Now the CCI, we had a dip, the setup here, and here's our entry right on this date here on this candle, and it's still trying to push higher. The CCI is trying to get to the 100, where we want to take some profits up here or get out of the position, either way, which probably is going to correspond to meeting this area over here, this area here. So that's going to be very interesting to see. So for now, if you're not in, stay on the sidelines, be neutral until we get a confirmation of either way. So we'll have to keep an eye on that. It's going to be very interesting. So that's part of the fun, and we'll see what happens here. Well, as you just saw right now on the charts here, things look a little scary. So we just have to be patient before going in and adding positions as far as for investing. As far as swing trader, You just have to catch the swings up and down. Like I've been saying on the charts here, the positive divergence looks pretty good. So we're going to go ahead and consider taking the ones where uh, we have the highest probabilities here. So keep an eye on these videos and we'll go from there. All right. Keep your eyes on the markets. Bye.